And it's 1:30 p.m. right here in Lagos, Nigeria, watching Business Incorporated live. Coming up on the show, Ghana's consumer inflation edged up again, this time 42.5% year-on-year in June from 42.2% in May. According to OPEC, global demand for all forms of energy is forecast to rise by 23% through 2045. Data from CBN shows the federal government spent $1.1 billion in foreign debt service as total remittances hit $952 million. Hello, welcome to the program. I'm Ladi Williams. As always, let's check in on the market. Starting on the African continent, there we see the NGX there having a pullback right now intraday. We see the NGX there down a big one there, about 0.81%. I'm talking about the NGX. Other parts, markets we track, not looking so bad there. The South Africa index, 0.76%. It's up. NGX still holding on to that 65,000 level, down 0.81% at intraday. Wonder if that's going to flip by the end of trade today. Let's look at other parts now, like North Africa, the EGX 30, that's up marginally by 0.01%. At intraday, marginal increase. Then we see Kenya, the Kenya bourse there, on that bullish run again, up 0.75%. That was on Tuesday. Let's look at other markets we track now in the Middle East. We see it's mostly mixed sentiment right there in the UAE. It's all negative, marginal negative there, 0.01 and 0.02%. That's what we're seeing in the UAE there. 9,588 points for the Abu Dhabi index. Still within the region, we see Saudi Arabia and the Qatari index both positive. Right now, Saudi is up by 0.68%. Qatari index up 0.38% in the green on the flip side. Still watching out for how those markets actually close. Let's take a look at what's happening in Europe now. We'll see OECD in its 2023 employment outlook says the world's most advanced economies on the brink of an AI revolution. Tells member countries to prepare for the negative side effects from the mass adoption of artificial intelligence. Well, joining me now is Chiponda Chimbelu, joining me right there from Berlin. Great to have you, Chip. So what risks does AI pose for some of the advanced economies?
Well, the OECD is warning that more than 1 in 5 jobs are at risk of being lost to AI. Since the end of last year and the arrival of technologies like ChatGPT, we have seen that generative AI can perform complex tasks. Generative AI enables tech systems to write reports or even create images, and that means that even white-collar jobs are now at risk of being replaced by AI. The OECD says some of the jobs at highest risk are in finance, medicine, and law. Now, these are jobs that account for a higher share of the labor markets in countries such as Germany, France, and Italy.
Right, so AI getting ready to take a job there, but how's the EU dealing with AI?
The EU is leading the world when it comes to regulating AI. Last month, the European Parliament voted in favor of regulating the use of artificial intelligence systems across the bloc. Now, this is the first act of its kind in the world. The EU law proposal, which still needs to be adopted by the 27 member states, aims at protecting fundamental civil rights, among other things. So that includes protection from so-called social scoring systems, which can judge people on their behavior or appearance. And then, of course, there's other tools that might lead to discrimination, like predictive policing and remote facial recognition in public. Those tools will also be banned. And, of course, any violations of the EU's AI rules could lead to fines of up to 30 million euros. And now, also, up to 6% or even 6% of a company's annual global revenue could be fined in those rules. And the response from companies has been critical so far as we can expect. While they welcome standards for using AI, businesses are saying strict rules in the EU could stifle innovation. And that is something, of course, that could also make European firms less competitive globally. Now, what companies want to see are more global standards for regulating AI. EU officials, as we know, have been speaking with their U.S. counterparts about some common AI standards, but there's, of course, nothing concrete yet.
All right, all eyes on regulation at this time. What can we expect from the markets in Europe?
Well, European stocks are expected to trade higher, and traders will be looking at U.S. inflation data, which will be released later in the day. Now, that will be providing a signal for the outlook for Fed rates. And the U.S. Central Bank is also set to release its Beige Book. It's its commentary on the current economic conditions. And apart from that, markets will also be watching how the U.S. Federal Trade Commission responds to a judge's ruling against the regulator's bid to block Microsoft's acquisition of video game maker Activision Blizzard. And here in Europe, Spanish and Portuguese inflation data are due to be released.
All right, all eyes on that Activision deal. Thank you so much, Ponda Chimbelu, right there in Berlin. Let's take a look at what's happening in the U.S. now. See, U.S. stock futures are slightly higher this morning as investors look towards the first potentially pivotal inflation report slated for release this week. You see behind me, it's all green. For the U.S. Futures there, we see the Dow Jones Industrial Average, that's up 0.13%. S&P 500 futures, 4,481 points. That's also up 0.18%. And the tech-heavy NASDAQ, 15,292 points, up 0.20%. Investors are eyeing the June Consumer Price Index reading due before the bell today. Economists polled by Dow Jones anticipate the closely followed inflation indicator will rise 0.3% from May and 3.1% on an annualized basis. All eyes on that number coming out later today. Let's take a look at what's happening in Asia now. See, Asia-Pacific markets mixed ahead of that. Also, that key inflation data coming out from the U.S. today. Economists expect the U.S. inflation rate for June to fall slightly to 5%. We'll see right behind me there. The ASX, that's up 0.12%, close. The Nikkei 225, 0.81% down to close, and the Kospi 2,574 points, up 0.48%. Other markets we track in Asia there, HSI 18,860 points, up 1.08%, and the Shanghai Composite 3,196 points, down 0.78%. So still all eyes on that inflation data coming out from the U.S. And looking at other markets now, global commodities, we see oil stuck between strains and economic doubt, while gold is nearing a 3-week high. Let's get a sense of what's to come with technical analysis. Now, joining me is Sunil Dixit, Chief Technical Strategist, SK Charting. Sunil, great to have you on the show.
Thanks.
So, Sunil, tell me, what are the charts telling you about oil prices, how's it going to end the week and into next week?
Well, we have already seen move up towards 75 and 76 recently after the Saudis' announcement of a million barrel cut in output, as well as Russia's announcement of half million barrel cut in exports. So, and there's been some news on Chinese stimulus. So that's pushing prices up fairly. And on the downside, I see a good support level around 72, between 72 and 71. But the upside remains open towards, I think there's enough room to move it towards 78 and 82.
Definitely, the first half of 2023, we've seen oil prices still quite volatile. What are you seeing for the second half of 2023 with oil prices? Do you see a rebound coming?
I think the upside mobility will be limited to 82 and 83 for a while. And unless there is a strong acceptance above 83 levels, bears can always start prowling for further downside, which has a strong floor at 65 and 60 zone. So the new normal would be $60 on the downside.
$60 for the downside. But I know the Saudi prince did talk about the shorters in the market, in the oil market. He did say that they will be ouching soon, in his words. Do you think the best strategy right now is still to short the oil market, you know, going into the second half? Do you think the shorters are going to come up on top?
Yes, of course. The shorters will always look to short at a higher level. That is, I think, 82, 83 zone will be on the radar.
All right.
For betting shorts.
Okay, so the shorters still have it then. I guess no longs for now. Let's look at gold prices now. It's near a 3-week high. How will the U.S. inflation print affect gold prices?
Lowering inflation also puts pressure on dollar, which eventually is supporting gold's up move. As we see, it has already tested 1950 after the news come. And further up move towards measured, let's say, 1975 and 1985. And the sellers will look for repositioning their shorts at a higher level for better risk-reward ratio. As 1850, 1885, and 1845, these zones are still open in the Beers book.
All right, definitely be watching out for those markers. That's Sunil Dixit there, giving us what to expect, technical analysis right there. Thank you so much. Always great having your perspective, Sunil Dixit. That's Chief Technical Strategist, SK Charting. Thank you.
That's welcome.
Right now, still talking about oil. See, OPEC says global demand for all forms of energy is forecast to rise by 23% through 2045. All executives and officials from the Organization of Petroleum Exporting Countries have repeatedly made the case for continued investment in oil, warning that prices will otherwise spike higher. According to OPEC Secretary General, says the global oil industry needs about $12.1 trillion in investment during the same period. He also adds that the industry was not on track to reach that level of investment just yet, as most countries are right now making pledges for net zero. And the West African Capital Markets Integration has announced a minimum capital standard of $500,000 for broker and dealers that intend to trade across the region. At a 2-day capacity building sensitization program held in Lagos, the project manager of WACME, Abdulrashid Zubair, and an official of the Ghana Securities and Exchange Commission also mentioned plans by the body to integrate and deepen capital markets across the region. The WACME Phase 2 project is funded by the Africa Development Bank through a grant from the Capital Markets Development Trust Fund and implemented by the West African Monetary Institute. Take a listen.
So that's what it is. And when the whole regulator have their becomes a qualified West African, hopefully like Mr. Dr. Zubair said earlier, we get all they need to do is to file the documents, okay, and that gives that broker the.
The settlement issue is another big issue, which is one of the major issues we had in the phase 1. Because of the settlement issue, you have to look for the third currency changing to the amount equivalent to know the reference.
All right, well, it's all about integrating all those markets right here in West Africa versus and be able to trade right here from Nigeria and other markets. Well, we'll take a break now. When we come back, take a look at what's happening in Kenya. We'll see their taxation plan hit a snag after the High Court indefinitely extended the previous suspension on the Finance Act 2023. That's our next conversation. Do stay with us. Welcome back. Well, breaking news now. U.S. inflation, we have that inflation data. Finally, that's for June. Inflation falls 3% to the lowest level in more than 2 years. I've seen price pressures ease right there in the U.S., so I'm sure markets are definitely reacting to this right now. U.S. inflation falls to 3% as the lowest level. That's the inflation data for June that we've all been waiting for. It's out now at 3% right now. Let's take on our next conversation now. The High Court in Kenya has extended orders barring the Treasury Cabinet Secretary from implementing the Finance Act 2023 after dismissing an application by the government to lift the freeze. Well, let's hear more now about this from Wachira Kariuki, Head Training and Research, Windsor Brokers. Great to have you on the show.
Thank you, sir. Mr. Ladi, it's always a pleasure to be on your platform.
Always
sir.
Great having you. So why is the Finance Act getting so much resistance in Kenya?
Mr. Ladi, so it's being pushed for various reasons. Obviously, it's being used by the opposition as a political tool. They're insisting that the new government, which just came in last year, August, is oppressing the people. Of course, the current government is saying that they need to implement some of those measures. It's necessary. Removing the subsidies has increased the cost, and they feel this is the actual price of commodities, and they're using this as a starting ground to now try to do better from here. So there's an outcry because politicians are using it for leverage, and unfortunately, it's a very powerful tool because it's affecting the common mwananchi, the common citizen. And so because it is touching on so many places and so many people in so many ways, that's why there's generally a very strong uproar at this particular moment in time, sir.
So I'm guessing the people of Kenya are happy with this freeze.
Correct. It's ecstatic. In fact, funny enough, now the opposition then organized for something called demonstrations. So today in Kenya, as we speak, there are demonstrations going on towards the government in support of that particular freeze by the High Court. So there's a general consensus that it was not debated enough. There was not enough participation. The general citizen feel they were not involved enough, and of course it goes against them. The employees feel that they're going to be charged more for houses they don't need. They're going to be paying more for the fuel. There's just more costs. There's more housing and health costs that are being part of the bill. And so there was general happiness that the bill was suspended. And so, yes, most people are happy as they feel it was a bit more oppressive than it was beneficial to them, sir.
And definitely the government is looking for, revenue at this time. Definitely not happy with this judgment. What do you see the government doing next?
The government will have to be more creative and try to expand and find more intelligent ways to raise money. To oppress the people who are already earning, the working class, by demanding more from the salary is not a very good thing. To touch on basic products like food and fuel is also dangerous and unnecessary. So they'll have to find a balance between pleasing the people and still trying to have economic progress, something I know the president is very attuned to and trying his best to do. So it's a balancing act, and it has to be done well, because for as long as something, no matter how positive, is perceived as being negative to the public person, then it's probably not going to be taken very well. So in the short term, I think it was a good thing for the High Court to suspend it. In the long term, I suspect they'll be forced to review it, restructure it, and present it again to Parliament and the citizens at large. Hopefully this time it will be taken better, with more response and a bit more participation.
I believe some taxes have already been collected. What happens to, those taxes already collected by the government since July 1st, after the initial suspension?
Correct, sir. So one of the few things that had already been implemented was something called the fuel levy. They had taken the fuel levy from 10% to 16%. So that was implemented immediately, and the price of oil shot up the previous day. So by morning, that price had changed. So funny enough, the person who took that issue to court is called Senator Omtata. He has requested that the CEO to EPRA, Energy Regulation Committee, be disbarred and removed from his role. The court is yet to judge on that. So that particular revenue has already been collected. It's in the coffers of government. And so I don't know whether that's going to be returned, but in the pleadings that Senator Okiya Omtata put, it was like that money needs to be taken back or at least injected into something that is citizen-related or useful to government, but not utilize it or worse, to continue with it. So it's a standoff that's happening between the judiciary and the government as of now, because some of it was already implemented and now it has been stopped. Fortunately, that execution had not gone to too many mandates. It had not touched on the housing levies, people's salaries, because it was in implementation. So I'm not sure what they're going to do with that money. It's unprecedented. We've never had such a situation. But I suspect they're going to utilize that money. I don't think they're going to take it back. The question is whether they're going to keep on doing what they're doing and stick with those prices. But as at now, the prices of fuel have not been adjusted backwards. They have not been reduced. They're still on that particular price level. So, like I said, it's a standoff between the judiciary and the High Court, and the government is caught in between. And I suspect they'll find a middle ground on how to go about it. As long as the citizen is happy, and with the current demonstrations, I think they'll have to regress on some of those decisions or find a better way to deal with them. Right,
and
like
definitely
bringing back the subsidies, sir.
And definitely, most citizens need to be happy right now with all the pressure, coming from all sides. But how are the markets reacting, to the freezing of the Finance Act in Kenya?
There's been a drop in the prices, in the share price of some of the oil producers. Kenokobil, that was bought out, operating under another name, Rubis, has seen a slight drop in that particular issue. But because the prices were released and government has not gone back to reducing that money or taking back that money that was collected, the price has stabilized in the last 2 days. I don't think it's going to be a very strong surge. I suspect it's a wait-and-see approach for the market until we see how the government is going to deal with that issue or how the High Court is going to suspend those particular actions that they said should be taken by government. Therefore, markets are stable, and that's why you saw there was a bit of an upswing in the NSE Top 20 Share Index because there's not enough activity to drop the market. However, the demonstrations is another conversation altogether, because now that affects how the entire world views Kenya in terms of political risk. So we await to see whether the demonstrations today are going to be consistent, if there are going to be more of them, or what effect it's going to have, or it's going to become a full-scale outright war between the citizens and the police. I don't think it's going to get that point in time, but markets are still stable because I suspect these demonstrations have been there every week for the past 3 weeks and there have not been much effect. Therefore, I think we are now used to this particular crisis. We've absorbed it and taken it as a new normal. And so markets just continue to go on. For as long as the companies are declaring profits, we are in June last year, half-year profits were fantastic. All oil market has made money. I think by and large, the markets are going to, for lack of a better word, take the punch, absorb the punch, and keep surging forward, sir.
Right, I guess the markets go on. Thank you so much. Always great having you, Wachira Karuki, Head Training and Research at Windsor Brokers. Thank you.
Thank you, Ladi. Thank you. Always a pleasure being on your channel, sir.
All right, now let's head on to West Africa now. See, data from Statistics Service shows that Ghana's consumer inflation edged up again to 42.5% in annual terms in June from 42.2% in May, driven partly by higher food inflation. West African nation is trying to emerge from its worst economic crisis in a generation as restructuring its debt. Inflation accelerated slightly in May from 41.2% in April after declining for 4 consecutive months from a more than 2-decade high of 54.1% in December. The International Monetary Fund has approved a $3 billion support package for Ghana. It said last month that its economy was showing signs of stabilization. Authorities asked the IMF for help in July last year after rampant inflation spurred street protests. And still, in West Africa, the federal government of Nigeria spent 1.16 billion naira to service its debt obligation from January to June 2023. According to the Export and International Payment data released by the Central Bank of Nigeria, the federal government spent $112.35 million in January 2023, $288.5 million in February, and $400.5 million in March, and a significantly lower service of $92.8 million for the month of April. A breakdown showed that Nigeria recorded $79.18 million remittances for the month of January and $83.75 million in February 2023. And now Eskom Pensions and Provident Fund signed up for the United Nations Net Zero Asset Owners Alliance as it pursues plans to cut its greenhouse gas emissions to zero by 2050. South Africa's biggest self-administered fund becomes the third signatory in the country after insurers ARC Limited and Old Mutual Limited is the fourth in Africa, according to data from the United Nations Environmental Programme. UNEP's mission is to provide leadership and encourage partnership in caring for the environment by inspiring, informing and enabling nations and peoples to improve their quality of life without compromising that of future generations. And that's it on Business Incorporated today. Thank you for watching. I'm Ladi Williams. Bye for now.